All right, should be running live now.
Let me refresh.
How long you been doing this, Mike?
Since January.
I see you're old pro.
That's right. It's a pro.
Yeah, it's not coming up live.
Well, it might take a while. It's definitely streaming.
Okay.
Okay.
And that's PANGTV.
I never tried to do both of these at once, but we'll give it a shot.
And it's PANGTV.
It's YouTube, panjtv.com.
PANJTV.com.
Just remember, if you screw it up, you're going to owe more in tax when I do the tax return.
Okay, and by the way, they're hearing everything right now because it's running already. So
Oh.
everybody's got the audio. You can hear the headsets, and the microphones are all working.
Yes. Yeah.
This gentleman here, if you can move the mic a little bit closer,
Oh, sure.
it'll sound better. Yeah.
Thank you, sir.
Okay. Okay, we got 2 minutes.
2 minutes. Let's try the stream again.
You got it? No?
No, it's not coming up.
No, it says it's streaming.
Who's Cute Stat? I came up with cutestat.com.
Oh, that's me.
Oh,
It's a cute. Sorry.
sorry for what?
I'm a bad influence.
Yeah, you are.
This is true.
I told Sue that you have to behave.
Oh, you told her to call?
Yeah.
Rob?
I told her to listen in.
What is it, PA New Jersey Radio YouTube or PA New Jersey?
It's
Radio.
panjtv.com.
Yeah. Oh, I keep,
Yeah, I'm coming up with the same thing.
What?
Here we go, though. Right
Got it?
here. I got it right here.
You got it to come up?
Not yet, I just hit the
No.
button, but
T.
to get me to PANGTV.com.
And Jay.
I got PANJ.com.
Yeah, there's listen live.
Now, you look at PANJ Radio.
No.
Right,
On the PANJ TV, the picture at the top says PANJ Radio Listen Live.
For some reason, I'm not even getting internet
Mike, are you
service
looking
at
it
the
up?
moment.
No, I'm doing email.
Here we go, guys. Anyway, I'm recording this. I can post it later.
cool.
I just wanted to watch it so I know when not to make faces.
I don't see.
And Dennis needs that.
Yes.
You should have seen the faces he made last
Yeah.
night.
Oh, come
Alright,
on,
now
that's
it's-
what makes it all fun, right?
It's 11 o'clock. Does that mean anything?
Yeah, we're going to go live right now.
Oops.
Good morning, everyone. Welcome to Business Tax Matters, formerly Tax Talk with Mike and Dennis. I'm your host, Michael Davis, and I'm a certified public accountant. My co-host is Dennis Markowitz.
Good morning. I am an enrolled agent.
We both operate from Bucks County, PA. We changed the name in order to expand the content of our show to include business issues in addition to tax. Today's special guests are Donna Houghton from Remax Center in Jamison,
Hello, everyone.
Peter Bucksbaum with GMH Mortgage Services in LLC in Conshohocken,
Conshohocken. Thank you, Mike, for having me.
and Michael Danner with Wells Fargo Mortgage, Home Mortgage out of Doylestown.
Thanks, Mike. Appreciate it.
Our mission is to inform our listeners every other week as to the various aspects of running a business, the tax code, and answer any questions you may have. So please call your questions into our call-in number, 609-460-4673, with any questions you may have. Also, today we're simulcast live on video through PANJ YouTube page at panjtv.com. We'll monitor your comments and provide feedback as we go. So that you know, if you're listening to our live show today is Tuesday, June 6, 2017. We also have an email address, which is bizandtaxmatters@mjdaviscpa.com. And our show will also be available on podcast at panjradio.com. Also, at 11 o'clock for the next week, it will be replayed. So if you're not listening to our live Tuesday show, send an email with your questions and we'll answer it in our next show. Our email address again is bizandtaxmatters@mjdaviscpa.com. Please note tax talk in the subject. If you're listening to our show from a podcast after it stopped running, please email the questions. And again, our phone number is 609-460-4673. So as we usually do, we're going to start with our tax updates. The first one, in some jurisdiction, courts can follow equitable distribution factors, and in some cases it can cause harm to the IRS. Potential injury is inflicted on the taxpayer. The probability the U.S. will succeed and public interest are all taken into account. In a recent decision, the tax court for the Southern District held an injunction could be issued to enforce an over $2.7 million unpaid payroll tax liability without looking at the traditional equitable factors. And the only reason I bring this up is because our editor's note on this is that this was a decision in the Southern District of Texas. The 11th Circuit disagrees with this approach. The 6th Circuit and a California district have relied on this approach in the past. So basically, tax law can depend on, even though it's federal, where you live.
Very good. The criminal conviction shows willful neglect in a penalty refund case. The case stems from a taxpayer who did not file his tax return or pay his taxes. And he applied for a refund of the penalty on the basis that it was not willful neglect. And he lost the case. Of course, that's dear to us because it's close to home. That was Chaka Fatal, who is now in prison for willful failure, among other things.
And the court found that because of his criminal conviction.
Yes.
Yeah. In a case where the taxpayer was taking depreciation on real property and they did not factor out the land, which is required, the IRS disallowed a portion of their deduction and attributed it to land, which is what the regs say. And what the tax court used was and the IRS, they used the county assessments and the percentage that the county said was land versus what the county said was building, which is extremely high. Because the taxpayers didn't do anything prior, the IRS won that. And so something like, I think in this case it was like 45% of the cost was allocated to land. So, and that's a tax court summary opinion, 2017-31.
The offer in compromise wasn't accepted when the IRS cashed a check, and then they turned around and refunded it. Someone claimed an offer in compromise under the form 656L, which is a doubt to the liability, and they submitted it with a $3 million check, which the IRS deposited. They then turned around and denied the offer in compromise and returned the check. And the taxpayer was very upset about this. And he wanted to say that because the IRS accepted and deposited the check, that they accepted the offer in compromise. And this was not necessarily the case. They have 90 days to reject it. Fortunately, the money was refunded. And a lot of the offers I do, when you put in money that you owe on the debt, they will take the deposit, deny the offer, and keep the money. Because it's owed, and they just apply it to your liability.
Yes, they will do that. In a situation with a divorced couple that each owned rental properties that they took as losses on the returns, they wanted to be relief from joint and several liability on the return on each other. The taxpayer took the position that each spouse should only be relieved to the extent of the losses claimed for the other spouse. Their divorce decree said it should be 50-50. The IRS said they're not bound by the divorce decree because they weren't involved in negotiating it, and therefore, in a tax court memo 2017-80, the IRS said this is the way we're going to do it, and it was 50-50.
The IRS issued its spring 2017 Statistics on Income Bulletin, and this is for the year, the data on the year 2015, in which there was an increase in the income tax of approximately 1.3% from the prior year. The adjusted gross income also went up, and that increased by 5% over the prior year due to increases in salaries, wages, partnership income, and the other items. The average adjusted gross income reported on tax returns was $69,465, and that's an increase of 6.5% of the prior year. The total adjusted gross income increased 7.5% to $9.71 trillion. If anybody's interested, the report is on the website of irs.gov/UAC/SOI-tax or stats. If you go into the irs.gov, there's a search block there, and if you put in Statistics of Income Bulletin, it should take you where you have to go.
Or if you put in news release IR 2017-101, that will bring it up also.
Yes, there's multiple ways of getting this
Of getting it
information.
up, yeah.
Whether it's accurate or not is another issue.
Well, it's from their records, so we'll assume it's as accurate as their records are.
Yeah, you never assume anything, especially when you get an IRS notice.
Speaking of IRS notices, the IRS is introducing a secure messaging pilot program because they're going to use messaging technology now to conduct correspondence examinations. The pilot program is by invitation only, and they intend to invite 8,000 taxpayers who are currently undergoing examination to participate. Tax practitioners that have a valid power of attorney may also participate in the program. After receiving the invitation, you have to register via the IRS Secure Access website. And just a note on this, this is in the middle of IRS telling us anytime you get an email from IRS, you should ignore it because it's not from them. So the only thing I can say to people is when you get an email, take your mouse and hover it over the link and make sure that the link says it's going to where it says it's going. Read the link. Or just look at where you're supposed to go and open up your browser and type it in yourself.
Very wise information. On that note, we should be alert of fake emails that are coming from either the local police or State Department of Motor Vehicle, the DMV, claiming you have a traffic violation. They are new scams that are requesting you payment, and if you don't make the payment, they will take your license and it'll be revoked. This is something that's new, but these citations are never emailed with links in them, so that you have to be cautious and contact your local police department and be suspicious of anything that you receive in the emails. I know I get an inordinate amount of scams, as I know Mike does too. And you could do everything you want, and you have to be extremely cautious. The biggest thing is you'll get something from irs.com. No such thing. It's irs.gov.
Right.
So when you take a look at it, I've gotten other emails, the link looks real, and you really can't tell today because everything is computerized. So be cautious.
Yep. And on that note, we're going to get to our topic today, which is basically first-time home buyers. And like I said, our special guest, Donna Houghton out of Remax Real Estate, Mike Danner from Wells Fargo, and Peter Bucksbaum from GMH Mortgage. The first thing I'd like to do is I had written an article that I know Peter and Donna have given out to people for first-time home buyers and go through some of the tax points. And one of which maybe the two mortgage guys can actually discuss is if you pay points when you buy your home. As a purchase of a principal residence, the points are deductible in the year that you buy the home, provided they're a standard practice in the industry, they're not excessive, you're on the cash basis, which I think 99.9% taxpayers are, individuals anyway. You paid them and did not finance them, and that they're separately stated on the settlement sheet and computed as a percentage of the principal of your mortgage, and that they're clearly stated on the settlement sheet. My question here is I've seen a lot of these where a lot of these fees now are just like $725. They're not percentages of the mortgage. According to the regulations, they're not deductible because they're not considered points. Is there a reason the companies have done that?
I don't know the actual reason. I can guess, and I can guess because when they made changes, and Mike helped me out here, but when they made changes, I believe a lot of our fees are considered origination fees. And I don't believe origination fees are deductible. They used to be when they were bona fide interest fees. Now, some of the origination fees have nothing to do with interest. They're just junk fees that are
Right,
charged.
and they're not considered, they're not done based on a percentage of the mortgage. So
Right,
they're-
Right, it's not a percentage of the mortgage, and Pete, you can speak to this too, is what they used to call a processing or an underwriting fee or so on and so
Correct.
forth is now, at least on my CD, which used to be the HUD, that is now called this closing disclosure, is listed as an origination flat fee. Okay,
Yes.
so they've changed the wording on that, and I don't know if that's semantics or the way that they just want to draw it out.
Because I think what they're trying to do is they're trying to make a loan discount should be deductible, right? Because
Right.
it's prepaid interest, it's something that you pay in advance to avoid or get a lower interest rate. And that is a percentage of your loan amount.
Yes, that's what I was going to get to. The origination fee as an origination fee, and again, going back to a HUD or something like that, the original origination fee would be called that. The origination fee up to the first 1%, and then above and beyond would be called discount points.
Correct.
And Mike, to your point, it is detailed that way on the closing disclosure, and it will be read as a percentage of the loan amount. So that is how it's charged. So it's easy, and I tell people when I'm discussing that with them, they may be paying points and they don't know that they are. You can look at if somebody's charging you an origination fee, it's easy to spot. So say you're borrowing call it $100,000 mortgage amount. If you see just a random fee of $1,000, that's 1% typically.
Correct, and I do look at that when I see these statements, but usually the origination fees are no longer a percentage. They're just a fixed amount.
Because they're mostly junk fees today. And
Yes.
so I don't think those junk fees are deductible.
Even though they're still calling them origination
Correct.
fees.
Correct.
It was
They're-
kind of the new rules that they came up with when they decided to change the world.
Well, and it's built back into the actual quote-unquote costs of the loan.
Correct.
So taking away that deduction.
But previously, before they changed the rules, they
Yes.
were included in the percentage. So they changed the rules for that, but they never changed the tax code
Right.
to comply.
Well, but the junk fees weren't considered origination fees before, and that's where the change. So that's a recent change.
If they were separately stated, but if they were included in the origination fees as a percentage, they were deductible.
Yes, but they weren't, but again, junk fees were never something that was an origination fee till they made some changes to the law.
And then they
So-
changed what they called them
Yes.
without changing.
They
Well, and I
have
think
different
I think that's also what they're trying, quote unquote, to do. And again, you referenced the change. That was what, coming up on 2 years ago in October, right? So those changes that were enacted when we went to the closing disclosure, you'll have that, like on typical closing disclosure that I'll see, it'll have that origination flat fee, which is, $9.95. Okay, and then under that, it'll say back to the percentage. So I think you'd be okay with those origination fees that are charged below that, as because it's denoted as a percentage. Is that correct?
Yeah, well, I look at the ones that are denoted as a percentage,
Right.
and those I deduct. The other ones, don't comply with the code.
Because all the changes that were made
Correct.
by people that don't do what we do, so why would they get it right?
I have a
That's-
question,
Yes.
and it's directed to Donna.
Oh, okay.
What do you tell your people about the origination fee, or do you not even touch the topic?
That is not usually my forte, so I usually turn that over to Mike. I do a lot of work with Mike, but I do tell them to look at that and to ask the questions that they need to really ask and be aware of, and that includes all fees. So they need to understand what they're getting into.
Well, that I find is a problem with the younger people, the first-time buyers. They have no experience, they don't know what to ask, and they don't know, they just assume they're
That's why we're having this show
Right.
today, so we can give them that
Right.
information.
And you'd be
Yes.
surprised, because when they reach out to their lender, there are questions that they are aware, more aware than you think. Because they have the technology that's available to them, they do a lot of research. And it's just amazing, some of the questions that they do come up with. So don't let even though they're young, don't let that fool you.
Yeah, but a lot of the information that you come up with when you do research on the internet is wrong.
Yes.
Correct, but that's why they ask the questions.
That's why.
It
Just
does
enough
lead
to be
them-
dangerous.
And
Yes.
does lead
sometimes
them
they
to the
don't
right-
ask questions because of that.
Right, but sometimes I find it leads them to the right question because they know that the answers they're getting are not necessarily accurate.
Correct.
So then they do gravitate back and ask the question. I find that the questions have changed over, the last few years. I've been 45 years, so it's certainly changed. And lately, the questions are better questions than they used to be. They make more sense to me than they used to make. 3-4 years ago, you got asked questions, you were wondering what planet were they living on. Now, the education with the phone, with the apps, with Google, they are asking better questions.
No,
I
that's
don't
good
think
to know.
they're as daunted as everybody thinks they are. I think they really do.
It's definitely a more informed customer.
Without
They
question.
really are.
You got a couple years on me, but I've been doing this for 17 years, so it's.
You have more hair than I do.
It's a more informed, definitely a more informed customer. They are asking, but when you and I spoke earlier, I think you focus on, and I know Donna does, first-time home buyers. You want
95%
you want to
of my
take those people and walk them through the process.
Absolutely.
So I try to be, and part of what I speak about when I talk to my customers, and Donna, you know this as well, is there is no stupid question. I do this 100 times a year. You're going to do this 4 or 5 times in your lifetime if you're lucky. So if I can help you be more informed when you're going through this process, and then you have as repeat customers, as I know you do too, Pete. So over the course of time, you want to instill a customer for life, and hopefully when they're ready to do this again,
Mm-hmm.
and I'm still alive, they'll come back. They'll come back to us, right?
Right, and that's the whole thing. You look at the client as, you're the professional. So you've been in this business, you breathe it, you dream it, it's 24/7. These young generation that's coming into the play, they just think, okay, we're going to buy this house and that's it, but they don't know the whole process. So you guide them by the hand, and you have to develop a trust. If you don't develop that trust, they're not going to come out with the questions to you.
Well, the biggest change I've seen over the last 10 years in the industry is the level of stress that my clients are telling me they feel in the home buying process. 5, 6, 7 years ago, there was no stress. Now I'm finding that every single client I have is expressing the same thing, that they are incredibly stressed out by the process. If I read my Zillow reviews, I'm apparently okay at taking that stress away because I'm funny, I was told. But it is interesting to me, the change in dynamics, because I think with the amount of information flow that's out there, they are overwhelmed and therefore become stressed because they don't know the answer and they're used to knowing the answer, right? I mean,
Right.
It's a pretty interesting world, the world of information. They are truly the first-time homebuyer, that generation is pretty well informed. So when they get confused, they feel stressed. It's a lot to watch. So I walk people through the process literally to the point of the next email you get will be asking for the next person you hear from
Absolutely.
will
Yeah,
be
sure.
Marilyn. And I literally walk them through each because they don't know. I mean, they have no idea.
And that's what
No.
they need. They need
Yes,
that kind of
without
help.
question.
Right.
Well, and it's almost a checklist and that kind of stuff too.
Absolutely.
And I can only speak to what I do, but when I speak to my customers, I let them know, like, getting a mortgage is a daunting task. Know what's going to here's what's coming your way. Here's what we're going to ask. And we're going to want to check your documents and then recheck them. And just so I find if I let them know that, they're a little bit more informed and it's less daunting for them because they can expect it.
Right, and when I meet with them, usually I get to them first before I get them to a lender. And that was one of the things I say. I tell them, I says, look, this is a folder for you. You're going to put all this information in. The lender's going to ask you for certain things, put it back in there because sometimes they ask for it again. So to just relieve some of the stress.
We're really good at that.
Yeah, well, you have to guide them by the hand because they really don't know the whole process, and they think they do. Some of them really think they do, and it's like, no, this is what I want you to do. And again, it's a trust level too. They have to learn to let go of what they think they know versus, hey, can you help me take me through the process?
Sure.
Absolutely. And you want to talk to them as, the way that I talk to them, the way I would want to be talked to, or, I don't want to say sold to the way I would want to be sold to, but it is that process.
But buying a home is a team sport, right?
Absolutely.
Sure.
Absolutely.
If the real estate agent and the mortgage person are not on the same page, that's when the wheels can come off the bus. And so I often joke, it is a team effort. Don't be upset when the real estate agent calls. Don't hide. Pick up the phone. And by the way, real estate person, when I pick up the phone and call back, don't hide from me either. We do need it as a team.
Exactly. And I've worked with Mike for many years, and that was one of the things when I would tell my clients, I would refer them if they don't have anybody, and and if they do, I says, I need to know the name of your lender, I need their phone number and their email, because I tell them right up front, I'm a control freak. I want to make sure that you get what you want and get you to the table with as less stress as I possibly can. Because it is a stressful thing, because it's a big investment.
It's huge.
It really is. It can make you or it can break you. And you really want to hold their hand through the whole thing. And Mike knows it. And anybody
Absolutely.
that I've dealt with know, I tell them right up front. Each lender that I don't refer, I tell them up front and let you know that I'm in this all the way. So keep me informed. So, and it's not like I am going to pick on my buyer, I'm just going to keep them on track. because you need to keep on track, because this is a timely thing. It's just not something like, oh, I'll get to it when I get to it.
Well, it's a legal document that has dates, right? So it'd
Exactly.
be nice if you could stay within the confines of the legal document.
Exactly, exactly, because if you don't, that buyer can be in default.
Without question.
And they can lose the money that they've already put down on the home. So, and my position is not for them to do that, to get them where they need to go. And if the house turns out to not be what they want, make sure they get that money back.
Good. Well, back to the points that we talked about.
Sorry.
No, that's fine. That's fine. I just want to let people know if it's points on a refinance, it's deductible over the period of the mortgage.
But you amortize it over the length of the mortgage.
Correct. Mortgage interest is limited to the first $1 million of debt on principal and a principal and second residence. It's $1 million of debt, $500,000 if you're married filing separately. And you can also have another $100,000 of home equity debt over and above that.
Is that debt, that home equity, can that come after you purchase? Can I?
That does not have to be based on improvements or anything. That's just a home equity type of loan.
Totaling $1 million altogether.
No, that
You
brings
can
it
go
to
up
$1.1 million.
$1 million. Oh, okay.
That brings it up to
Okay,
$1.1 million.
gotcha.
The mortgage interest has to be used for either improving the house or buying the house. If you refinance to send your kids to college, the additional amount you take out over and above what you already owe is not deductible. The interest on that is not deductible. And they now have that information on the 1098s because they now have the date of the mortgage on there and the balance from the prior year. So the IRS can now match that up. They did that 2 years ago in the Highway Funding Act, I believe. That was part of the Highway Funding Act. They hadn't had the ability to enforce that before, and that was actually put into effect in, I believe, the Reform Act of 1986 by Ronald Reagan is how long that's been law. But really, the IRS hasn't had the tools to enforce it until now.
Wow.
So, and I do know people that have deducted mortgage interest on their kids' education because of that.
But if they if they refinance to fix their home, that is
deductible. Correct.
Okay.
It has to be used to improve the home or buy the home.
Do you
One or
have to
the
prove-
other.
Do you have to prove that?
Oh,
If
yes.
you get audited,
If they
yes.
got audited?
If it's questioned, and it's
Yeah.
not a matter of audit, it can be what they call a correspondence audit, in which you receive a letter requesting the documentation of
Correct.
how you calculated it.
Correct.
Yeah.
And we'll probably be seeing those on mortgages.
I feel like I
Now-
built a library at some school somewhere when I paid my education. Can I take that deduction if I paid for my kids' education and built a library there? I mean,
No, but thank you for the library. Yes.
Well, let me ask you this question then. If they refinance, now, you don't see it nowadays because mortgage rates are just so low, but when they weren't so low, people refinanced to get the cheaper interest rate. So was that then deductible, or how does that
As-
work? You're not using it to redo your home.
No, but it was used to pay off the old mortgage that you used to buy or improve your home.
Okay.
So as long as you're using it for that, if you did that and took out another $50,000 for whatever reason, the interest on that additional 50 is not deductible.
Gotcha.
Okay, no matter what it's used for, unless it's used to improve the home. So,
Interesting.
yeah, and real estate taxes are also deductible for the new homeowner. They should know that at the moment.
At the moment, yes.
That's one of the things that they're thinking of knocking out in the new law.
That along with the interest, correct?
That along, oh, no, they're not
They haven't
looking at-
touched the interest
they're-
yet.
No, the current proposal, to my knowledge, does not touch the interest.
correct, just the
Okay, so
taxes.
the interest
Just the
deduction
taxes.
is still,
Correct. They're looking at knocking out the taxes. And there are taxes paid at settlement, so that you need to look at that also to determine whether they're on there. Money put into escrow for taxes is not deductible. So people ask me that all the time.
Just the reimbursement to the seller.
Correct. For those of you that may operate a business out of your home, the amount of space that you use for the home, based on the square footage, there are deductions available for that. And just a note that in Pennsylvania, if you have business and you have utilities, there is sales tax on that. And Pennsylvania now, for people that have home offices, is now looking for the sales tax on the portion of the utilities used for business.
Now, how do they go about doing that?
They'll look at your tax return and look at the percentage. You probably have a deduction on there for utilities,
Yeah.
and they'll want 6% of that money.
Gotcha. Wow.
Now, I've always heard, and maybe it's different, it's been years, but, if you go to the trouble, and it's got to be worthwhile to deduct whatever home expense that you're using for a home office, it brought about or screamed for an audit.
No.
With something like that. Is that not the case?
I have not seen, in the last 30 years, I have not seen a return picked because of an audit.
Okay. That's good to know.
Because of that. Have you, Dennis?
No, I have not, but I caution clients, before you take a home office deduction, be aware of not only the utility tax that's due, but any depreciation you take on the house is recaptured when you sell the house.
Correct.
So if you sell the house and you're under that portion of $250,000 per individual, $500,000 of tax-free, the depreciation is income to you now.
Correct.
On the
Right.
recovery. Now, I tell them, based upon the usage of, let's say, hypothetically 10%, the actual depreciation deduction is so insignificant in the total tax, and it's really not worth it.
However, the law says depreciation allowed or allowable. So if you get audited and you did not take the depreciation, they can still tax you on the recapture.
Yes, they can.
So if you're going to do it, my recommendation is to take the depreciation. The fact of the matter is, there is still a savings there, paying it at the end, because when you deduct it as a home office, you're getting the deduction and you're saving on the Social Security tax, which is an additional 15%. Where when you get it recaptured, you're not paying the Social Security tax on that. So you will be 15% ahead generally. Okay? Anybody that's buying a home, first-time home buyer, if they're doing it because they are moving, and they're moving at least 50 miles of the distance from their former residence to their old job, to the new residence to the new job, and that distance, 50 miles, they can deduct moving expenses also.
That hasn't been taken away yet, right?
That has not been taken away. And still, if you sell the home at some point, and you're single, the first $250 of gain is not taxed, and $500,000 if you're married.
That's only if you pocket the money, right? Or
No.
No, if you sell it. If you sell it and buy a new one, it's taxed up front, as long as you made
Okay.
more than that
Yeah,
money.
I'd just like to make a clarification, because a lot of people really don't understand the nomenclature. When they say $250,000 of profit, they don't mean you sold the house for $250,000.
Right.
If you bought a house for $300,000 and sold it for $400,000, that's a $100,000 gain that goes into the $250,000.
Correct. That's correct. And also, if you haven't filed your 2016 return and you bought a home last year and made energy improvements in 2016, you may be available for a credit, but that went away January 1, so they're not available. So,
And yes, you can amend the return to claim the credit.
correct. And Donna, you've got an article that you put together for some points for new homeowners to look at.
Right, well, I actually did not put it together. I belong to a group, it's Buffini and Company, and I'm sorry if I'm not supposed to do that, but anyway, They put it actually together, and what it was 7 tips to help navigate the buying process. I do put these flyers out to my past clients, people that I'm currently working with, because if they know what the process is or what the tips are, it makes them more aware. My position, what I like to do is, we were talking about informing. I like to inform my clients, my people, before they even decide. I call them my people, sorry about that. But I like to inform them ahead of time before they even decide to make a purchase. And like the first tip, and I'm just going to go over it real quick, is, you really need to, when you're thinking about making a purchase, talk to a professional, full-time realtor. And the reason why I stress full-time is because we're in it day in, day out, 24/7. We know what's going to change. And not that the part-timers don't, but you can reach us at any time during the day. Whereas if you are a part-timer, you're working, you might not be able to reach them. And buying a home, it's, you just, the thing is you just want to make sure that the person is in it to help you. And they all are. I'm not saying they're not, but we all are in there to help the first-time home buyer. But we can guide you. So you need to contact us first, and then we'll go get you through the process. And the next step would be to talk to a lender. Find out what you're able to be approved for.
You know any good lenders?
I know one right here at the table. I haven't worked with you yet, but I know one right here at the table.
I've heard a lot of good
Point me
things
in the right
about
direction.
Peter from people.
I can tell you I spent 5 minutes on the phone with Mike over the weekend, and I was impressed. So
Yeah, yeah.
Likewise, Pete, likewise.
Yeah, it's you want to work with a team. We talked about being with a team, and it's and I work with several lenders, and Mike knows that. And it's no offense to Mike, but everybody has a different personality.
Not everybody gels with everybody.
Correct.
Exactly.
If you've been doing this long enough, you
When we do
certainly-
referrals, no matter what it is, we usually give 2 or 3 names because of that. We
Right.
tell people, talk to all of them and see who you feel more comfortable with.
Exactly,
Absolutely, sure.
exactly. And you need to do that. And I do give them a list. These are the people that I work with.
Right.
And you make that decision. And they do. They usually really do. And they trust my opinion. So you want to talk to the lender because you really want to know, what can you afford? I'll give you an example. I had one client in the very beginning of my career where they decided to bypass the lender and they wanted to look at a house. They fell in love with the house, found out they couldn't get a mortgage. They weren't approved for it. That is heartbreaking. Not only heartbreaking to them, but I could feel it. It's like you don't want to be into that situation, so you really want to guide them, talk to the lender.
Well, and no offense, you've wasted your time.
I
You
don't
know,
look at
and-
that as a waste of time. I look at that as feedback. I look at
Right.
that this is a learning curve and it's feedback. Now you know this is what you need to do.
and that borrower may be ruined for quite some time before they stretch back into the market because every house they now look
Right.
at measures up with the first one they fell in love with.
Exactly,
And that's a
exactly.
nightmare.
And it is a nightmare. But there's also where, right now, we're in multiple offers.
Mm-hmm.
So if you and you fell in love with that house and you lost that offer, the thing is a realtor needs to really tell them, look, that house was not meant for you. There's something better and bigger for you. So let's just keep looking. And they do finally get over it. But it's a really hard place to be at. And being the seller's market right now, it's a tough thing for them.
Absolutely.
Because they don't want to go to a certain level with their, they have an idea. This is what I want to pay for a monthly mortgage. They already know.
I find that more often than not, too, Peter, you'll say this, I would think the same thing. And with the higher qualified buyers, you may come to them and say, hey, listen, I can qualify you probably more than you want to spend.
Exactly.
So you have to kind of tell me where you want to be comfortable. Here's the numbers I'm going to run, X sales price, X tax, and in the wonderful state of Pennsylvania in which we are, there's more townships and municipalities than there are in the rest of the world or in the rest of the country combined. So, the example I always give is you can buy a $300,000 house in Philadelphia and your taxes will be $2,500 a year. You take that 5 miles away and put them in Cheltenham, that same $300,000 house's taxes could be $15,000.
Exactly.
So that drastically affects your what we call debt to income ratio, how much your payment is, $2,500 versus $15,000 stretched over, 12 months, divide by 12, it's easy. I mean, so, difference of $250 versus $1,500 is a ton.
And that's a big starting point, because then when we do the search for our clients, we get an idea. It's like, okay, we know how much they're able to spend, and we know where the taxes need to be, let alone HOA fees, if there's any association or HOA fees.
Exactly.
Because all of that is incorporated into whether they feel comfortable.
As your total debt, your total debt.
Yeah.
And that's one of the biggest changes that I've found in the marketplace in all the years I've been doing this. So it used to be that we told a guy how much house he could buy in terms of purchase price. Now we tell the guy what his payment can be.
Absolutely.
Right.
And so it's a vastly different world, and I'll say it 10, 12 times to a guy, look, your payment max is this. And the guy says, well, how much house? I don't know. Because if you buy in Cheltenham versus buying in Richboro,
Right.
it's going to be a different price home no matter what you do. I find it interesting, so in talking to clients, I find that I'm always asking horribly personal questions right before I've met them. It always seems very uncomfortable to me. But the biggest questions that I need to ask them is, what's your comfort zone? Because as you said, Mike, one of the problems I have is that I think we actually still approve people for more than they are ready for.
Exactly.
And that's just a recipe for disaster.
I try to ask for a range and where you're looking and so on and so forth. And again, I go back to my referral partners, my realtors and builders and so on and so forth. Okay, so I talked to Mr. and Mrs. Smith. They want to keep their payment somewhere around this. Here's the numbers I ran. That's how I got there. And depending on which areas you look in, these are the taxes that we're looking for, right, and so on and so forth, so that the realtor has a better idea as to exactly where I came from. And that's kind of detailed in the correspondence that I send to the...
Right.
All that is all well and good. My philosophy is, because I lived through 4 of these with my kids, you have to do your due diligence, because
Absolutely.
it's a lifetime endeavor, and you should start 6 months before. Number 1, shop around, see what's available and how much it is. Number 2, get your credit rating up. Very important, because that is a direct relationship to the amount of interest that they can charge. Number 3, be aware when you buy a house that you're going to spend $10,000 for what they call settlement fees, at least. That has to be tacked on to the cost of the house. Number 4, if you're getting financial aid from relatives, specifically parents, you better make sure that the parents put the funds in your account, because the banks will ask for 3 months bank statements. And if they see the funds in there, you have a much better chance of getting a mortgage. Now, if you have to get a parent assistance at the end, that they're going to put in X number of dollars, be careful, because the banks are going to request a statement from the parents that it is not a loan, it is not to be repaid, it's going to be considered a gift that they want the parents to sign. If you do this, be cautious, parents, because you may have to file a gift tax return. And number 5, a lot of them think I'm paying $1,200 a month in rent. I can afford $1,200 a month in a mortgage payment. That's not true, because your utilities are going to go up, your cost of maintenance of the house is going to go up, so you have to work out a budget. And I always tell them, nothing is in a straight line. Be prepared, something's going to break in the house that you're going to have to fix, or do this. Go to professionals. You find a house that you love, check it out from stem to stern, because you don't know what's behind the walls.
Nope.
You don't know how good the roof is. Everything may be perfect for the house. You like the neighborhood and everything else, but there's always a problem along the line that you should be aware of and look at.
And you want to know what you're
Right.
getting into.
And you actually stressed 2 points, because there are programs that are out there to assist the first-time home buyers. They have a class, well, it could be a class, it could be a webinar, but they have them out there to help them be aware. And anyone that is a first-time home buyer, they may not qualify for the assistance, but the thing is they have that class to open up their eyes, to see those few things, look at your budget, and it just gets them on the right track. So that's really good.
What
I
kind of
have-
first-time home buyer programs are there available?
Well, I've dealt with Bucks County Housing Group. Sherry Pace is who I've always dealt with. And they actually, there's qualifications, and it goes by your income, it goes by your debt, you have to be pre-approved.
Household size.
It's all in there. But they have to look at the whole picture. They want to see which your...
It's really
which
a
your-
case-by-case basis.
It is a
type
case-by-case basis. Hopefully, they'll continue that. Montgomery County, now that one is a loan. They offer up to $10,000 in a loan, but it's 0% interest, and you got to make sure that the mortgage company that you're working with can accept that. But that one's a loan, and it has to be paid back when you sell the home. Montgomery County also has the same type of a program, but it's a grant. And it's not money that has to be paid back. It's still 0% interest, but they have to live in the home for 15 years. So if they don't live in the home for 15 years, that money
It's a
has
pro-
to be
it's a
paid.
prorated, right.
Yeah, it has to be paid back by when they sell
And
it.
the state has a program that gives you 4% of the purchase price up to $6,000 as a loan, interest-free, that they sign a document that states you have to pay it back, but you don't have to pay it back when you sell, if you sell within 10 years. There's a Pennsylvania Housing Finance Agency, which is a very cool concept for helping keep people in homes, but they also do some interesting financing for first-time home
Right,
buyers.
and that's what these groups are for.
Yeah.
It's to help those first-time home buyers who
Absolutely.
maybe that didn't save enough or didn't realize that the closing cost. They don't realize that this is how much I really have to put down. So, but there is that income limit.
Household income limit, it's not
Yes.
just your income limit, it's if mom and dad move in with you, how much do they make?
How
in
much
Social
do they make?
Security? There's a
Ex-
lot of different pieces. of the puzzle.
Exactly.
You
So-
have the same with USDA. I do a lot of rural housing, so USDA is 100% financing, 6% seller credit. You can buy a $250,000 house for about $800 in cash if you play your cards right. And that also has income limits dependent upon county and all kinds of different things.
And
I just want
Go
to
ahead,
throw
I'm
out,
sorry.
if anybody wants to call, again, the number's 609-460-4673.
Okay. And the second point that you brought out is when you look at a home, you found the home, you put an offer in, your offer was accepted, you better do a home inspection. I mean, some people do waive that. That's fine and dandy if that's what you want to do, but I'd never suggest that. You need to know what's going on in that house, and you need a good home inspector that's going to go in there and point everything out. Not say, oh, this is what's wrong with the house, this is what's wrong with the house, but to point out saying, okay, look, you've got the mulch is up all the way against the house. You don't want that. You want to make sure that you pull that away. And they explain things. You don't want a home inspector that's going to scare them. You want a home inspector that's going to be informing them, and that's really, really important.
It's like buying a car.
Yes.
Oh, yeah.
You're going to buy
Yes.
a car without having it checked out by a mechanic? I mean, hey, listen,
People
the
do.
brakes are about 50%, a few months down the road, you're going to have to buy brakes. Or, I don't know, I'm not a mechanic, but, the radiator is going to go or something along those lines, in the next couple of years. Just knowing what you're getting into is exactly what you're talking about.
Yeah.
A friend of mine's son was just looking at a house, and the home inspector found that there were water issues with the house
Right.
and drainage issues. And so they backed out of the house because of it.
Right.
Donna, you had mentioned that there are classes and courses. I've taught a number of them with the Bucks County Library.
Okay.
And the expression on all these young couples, and I can't mention the words that they use on air, but they are in total shock of what's involved because they have no clue. And,
doubt.
Correct.
I always tell them go to a professional, go to a legitimate real estate agent, to a mortgage broker, to a bank, but have your ducks in order. Be prepared to know what they're looking for and why.
Right. And some of them don't know. So that's why it's good to start with a realtor to find out, can you help me? And then have them guide them through the whole process, because they need to know. They need to know what the fine line is. They need to know this is an HOA. What is involved in, what do I need to know about that HOA? They really need to do their homework. You could guide them, but they need to do the homework.
You have to be careful now, because I don't like acronyms. And if you notice, when I go through the report I give, I don't say AGI.
Oh, okay. Homeowners
because-
Association, I'm
Correct.
sorry.
Because a lot of people have no idea what you're talking about.
That's true.
And don't want to say that they're stupid and, just ignore it. Listen to you, but
Peter would tell you, you need a decoder ring to work in the mortgage business. I mean, there is,
Right.
it's acronyms.
We speak
Right.
mortgagees.
There could be,
there is-
5 different acronyms in
Right.
one
Yes.
sentence.
Try working the
Yeah.
tax code.
Yeah.
Ask them about code
I can
sections.
only imagine.
It's interesting. The federal government makes us send out a loan toolkit, right, which I've probably read 100 times. I thought was the most useless document known to mankind. And so I started sending it to my clients earlier in the process, not when I had to, but before.
Right.
And all prompted because when I sent it to people after they bought the home, they were like, you couldn't have given this to me 6 months ago. This is actually informative.
Right.
So it really is a good guide. And if you want it, it's called the Loan Toolkit. It's probably available on every website that the government has. That was one piece of the puzzle. The other piece of the puzzle that I find remarkable that we haven't spoken about today is there's a, to me, my favorite thing, and I tell every client to do it before they actually let me run their credit, is to go to, optoutprescreen.com. So optoutprescreen.com is a website that you can go to opt out of having your credit information sold to somebody. And here's what's amazing. Every time if I run your credit report, your information is immediately sold to 20,000 other people that are looking for your information. If you go to optoutprescreen.com, what happens is it's like a giant do not call list for your credit information. And I always thought they should have changed the name of it. It should have been called Victoria's Secret, because it was, and one, it's a secret. Nobody in the room knew about it. But more importantly, the congressman that came up with it, it came up because his in-laws were coming to his office in Texas, and he got there to clean up before they got there, and there was a Victoria's Secret catalog. And he was so incensed that he had one because he had never ordered anything from the catalog, didn't want his in-laws to see it. And when he did research, he found out that he had bought something online. When he applied for credit online, they sold his information to Victoria's Secret.
That's interesting, because I've never heard of that. So that's now more information that I know that I can give to my clients.
And they're
They should
the
be-
worst offenders.
Yeah.
They should do that before they talk to their mortgage guy, before that guy
Absolutely.
runs
Before
their
the credit
credit.
is run.
And then please do not believe the fact that if I talk to your mortgage guy and then I talk to the other mortgage guy, I can't have the second guy run my credit. My score will drop. It does not drop.
No.
America would like you to shop. They're not telling you to stick with the one human being you spoke to. But it's optoutprescreen.com, and it's, I believe, if I remember correctly, good for 5 years, and then you have to renew it again. But it's a giant do not call list for your credit information. So
Interesting.
I did not know
Good
that.
to know.
I learned
I didn't
something.
either.
How about that?
Good.
I did too.
Now you go home.
That's all right. I'm done.
But speaking of acronyms, I did, like, when I talk to my clients, I will say, like, the MLS, and then I'll say the multiple listing system, because I'm telling you, I'm using the acronyms with you guys because you know them. But to my clients, I will say it, and then I'll explain it what it is. So you have to, because they don't know. And I don't talk like a doctor. You talk to them at their level. And one of the things you do want to make sure that your clients are aware of is that if you have any questions, I've been doing this for such a long time, I talk fast, please stop me and ask the questions, because like you said, no questions are dumb.
I look at a client's facial expression.
Oh, yes,
And I can tell whether they got lost, they don't understand.
yes.
And
Yeah, I do the
then
same thing.
then I go back.
Yeah, you have to
And
meet them in
discuss it with-
person. You
Yes.
have to meet them in person. You can talk to them on the phone, but you can't see the body, I'm sorry, you don't see the body language. You don't see the facial expressions. And it's so important to meet them in person and to meet them out of their home, because there's distractions in the home. You want to meet them in a safe place, like it could be in a coffee shop or a restaurant or whatever, but you want to meet them where there's no distractions.
Great.
Okay, have we answered all the questions that are out there? And
Oh, I don't think you've answered all the questions. I would doubt that all of them.
Scratch the surface, right?
Because we didn't even talk about that if they do buy a new home, there's a chance that they may be able to get their real estate taxes reduced if they look at having them reduced.
Right.
And there's ways
In
that
this
can be
area,
done.
Bucks and Montgomery County, I believe August is the deadline.
August
Yes.
1st is the deadline.
May 1st through August 1st.
Right,
I
and
believe.
then it
Correct.
starts all over again, so
Right.
it's not.
Right,
like
the
it's-
deadline just means that for the next year,
Right.
it's
You
the
would-
deadline. You can, if you do it in September, it goes a year
And Mike, you
later.
had mentioned before we got started that private mortgage insurance or mortgage insurance premium, three same letters just placed differently, right? PMI, MIP,
Right.
let's confuse everybody.
Yeah, let's-
That it is no longer in 2017 is not deductible.
It's no longer deductible, it's correct.
So there
And-
are
And the thing that I
multiple ways
find
to make it
about
go
it
away.
is that when it wasn't deductible, very few people paid it. When it became deductible,
Everybody
the mortgage companies started requiring it.
Wow.
You know,
Well, and that's, that's an interesting, and an informed mortgage person, and when you and I spoke over the weekend, an informed mortgage person, you can have different options. When you're putting less than 20% down is when a loan is going to require mortgage insurance, because they're insuring that amount anytime it's greater than 80% of the value of what you're purchasing. There are lots of different ways of doing that, given certain scenarios. Now, like an FHA loan, it's monthly mortgage insurance. It's really kind of the only thing that you can do. But on a conventional loan, you can look at different options. You can have that mortgage insurance taken away on a monthly basis and built back into your interest rate, so you pay a little bit higher interest rate. As of right now, like we were discussing earlier, your interest that you pay is still tax deductible. And then there are other options. Anyway, there's options.
And it's a math quiz. You
Yes.
kind of lay all of them next to each
yeah.
other and say, here you
Yeah.
go. Which one do you like better? Because, one of the things that has always bothered me about this business, many pet peeves, but I think that we have treated it like it's a one-size-fits-all world, and it's not. Each loan, as you know, Mike, has to be tailored to the individual client. Because each client has a different need. Somebody's moving, somebody's not. Somebody's in a job they're going to increase their pay more rapidly than the other guy. Everybody has a different need when they buy, so you really
we
do
have the
to
same
tailor
issue
your
when we
loan.
do tax returns.
Correct.
Sure.
Something that works for somebody is not going to work for everybody else.
Well, and one of the first things that I tell my clients too is stop fixating on the rate.
Yes.
Okay? Don't rate, it could be 9%, but if that payment is cheaper doing it this way, that's the way to go. So anyway, don't focus on the interest rate per se. Obviously, you want to try to get the best interest rate that you can.
And we want to
It's-
give you the best interest rate we have.
Absolutely.
Right now.
I don't make any more money by charging you,
Exactly.
giving you 5% versus.
And
Those
that
days are
goes-
gone.
And that goes back to having a good credit rating.
Absolutely.
Oh, absolutely.
100%.
Correct.
Absolutely.
So I want to thank our guests, Donna Houghton with RE/MAX Center,
Thank you.
Mike Danner with Wells Fargo, and Pete Bucksbaum with GMH Mortgage.
Thanks for having us.
I want to thank
Thank
you
you.
all for your help and your assistance. Our next show in 2 weeks is going to be on business lending. And we'll have a couple experts talking about borrowing money for your business. So join us then. And that's it. That's Mike Davis signing out with.
And Dennis Markowitz.
And thank you for listening.
Thank you, guys.
Bye-bye.